everyone. Today is Friday, November 4th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. If you're brand new to this video series, first off, thanks for being here. Thanks for tuning in. We break up our analysis into two parts. So in part one, we look through the numbers, we pick out everything that stands out, looks different, interesting, or notable. And then in part two, we jump into the charts, we take a close, detailed look at price action and those bigger market trends and try and best position ourselves looking ahead. So that is the format of the video. Let's jump into some of the headlines, takeaways, and talking points in this video from this week. So first and foremost, stock market finally takes a breather. So depending on what you're looking at, the Dow Jones was up 4 weeks strong in a row, and we finally now had a little bit of a retracement. Some markets, in particular, mega cap tech, taking a bigger retracement, a bigger breather, let's say, and frankly just looks like a train wreck compared to lots of other areas of this market. So there's definitely a stock picker's market out there, and there's relative strength that is very clear, and there are stocks diverging, correlations breaking down, and we're going to talk all about that in this video. We had the largest down move in the US dollar in 3 years, going all the way back to COVID, the start of COVID there, when we had that big kind of wild price action swings. That is a large magnitude move for the dollar that helped float risk assets in a lot of commodities. We got VIX trading at 1 month lows, so we had stocks and VIX basically selling off together this week. Again, all those commodities, oil, silver, are heading to nearby highs and attempting to break out. And we also had a big outperformance in world ex-US stock market. So let's jump into it here. Let's get into some of the numbers. If we look at the right-hand column, this was the weekly returns here. So S&P, Nasdaq, Russell, all in the red. Nasdaq clearly the standout here, down 6% on the week. It's also the only index here that is negative over the past 1 month. And then take a look at this last row here. This is world stocks minus the United States. So we're just using the ACWX index. There's lots of indices here, and you can get much more country specific and geographically specific, but you're noticing here a very big divergence this week. So we're going to keep an eye on this. Notice also 5% up over the past 1 month. So it's really at the top of the list here, everything outside of the United States. And we're going to continue to track that as we go on and talk more about it in part two. Now, if we take a look at these broader stock market trends here, you can see our short-term moving averages are still rising here. So again, we still are basically within the context of short-term trends, upswings, and in the intermediate term and the long-term all still are declining trending markets here. Okay, so 50 SMAs declining, 200 SMAs declining. There's no difference in the bigger structure, and in fact the difference this week was the fact that the Nasdaq 100 went bearish with a 10 SMA that is back to declining. Now, volatility environment's constructive. This is actually some of the most positive constructive action here. There's definitely some market structure dynamics, I'm sure, at play here with, basically the Fed rate hike decision was this week. And we had earnings out of the way. So we had, certainly lots of protection essentially probably being purchased in front of and into those events. And now that those events are out of the way, we're seeing, both in this case, stocks and volatility decreasing. But if we just look here at the pure level, VIX at 24.63. This is the lowest now. It's certainly in the 1 month and past couple of months that we've seen for the S&P 500 in a very long time. And it is, in my opinion, bullish to stay in this volatility regime. To be below 30, to be into the mid 20s, that's still historically a very elevated place to be, but it's a heck of a lot better than trading in the upper 20s and north of 30. And so I do think this is constructive for the market. NASDAQ vol, you can see, is much richer here. So it's still north of 30, hence the pain you saw in the Qs and some of those large cap tech names. Russell's below 30 now as well. Now, in talking with that dollar sell-off that we mentioned at the top of the video here. So here's just, I know this is a very squished, condensed chart, so you don't have to read too much except for these two big arrows here, which are just essentially showing you the last time we saw a dollar move, a knee-jerk dollar move that was as large as we saw this Friday. Now, the kind of fun context surrounding this is the fact that we just made new multi-year sort of top percentile swing to the downside here. We are very much still in the context of an uptrend. And in fact, the dollar index here was still positive on the week. So there were lots of gains and sort of front loaded action here to the dollar to the upside. And then Friday came and basically all of that sort of got unwound, and, the momentum, the balloon sort of popped. And we're going to talk more about this price action in part 2, but there's definitely some implications here, because the dollar and the correlations that everything is tied to the dollar is important for us to pay attention to. And we don't just bring it up here as a sole market that doesn't have, a very tight grip on financial flows. So this is an important market to pay attention to. We'll talk more about it in part 2. Now, in terms of breadth here, so 52-week highs and lows, we're still seeing much of the same dynamics from last week. And in fact, I guess if I were putting on a very, tight magnifying glass, big magnifying glass over this, maybe there's even some subtle bullish developments here this week, given the fact that, we did have markets down, the indices anyway, down several percent on the week. We didn't see too much of a difference here in terms of underneath the hood. And this also just reinforces the case that the mega cap tech, the market cap weighted indices are getting hammered. They look horrible, but underneath and the broad average stock here is starting to actually pick up a little bit of rotation, let's call it. So highs still in the, mid double digits here. So we're still not seeing a breakout into the 100s, triple digits yet in terms of stocks hitting 52-week highs. That's what we basically said last week. That's what we need to see. We're still waiting on it. The lows, you can see Thursday definitely creeped up. Friday, we'll see what the final number comes in at, but we are still seeing, the low 100s or even the double digits, not the 500-600s like we saw several weeks ago, which really indicated that sort of washout behavior. So this here still kind of jury's still out waiting for it, but some subtle signs that buyers are starting to regain a little bit of control here. Now, sector performance, most is red this week. So basically 3 sectors that basically stood out. That's energy, that's materials, and industrials. So all of those 3 were positive on the week. They are also the 3 sectors with some of the largest 1-month returns. And on the downside, communication services, technology, discretionary, all hammered here pretty hard, 5, 6, 7% to the downside. And 2 out of 3 of these, in fact, almost all 3 of these are negative. So the underperformers, the worst performers over the past month. Now, moving on to IBD Industry Rankings. So I pulled a different view here. So they have a bunch of different data tables, and this is all part of their digital package here, which you can subscribe using our partner link here. They're fantastic sponsors of our content and show. So definitely support the show, support them by using this link if you're interested. But basically what I'm pulling here is the industry groups that have the highest percentage of stocks at new highs. And so you can see that this is still very oil and gas dominated here. So that in industrials. So I guess in the first spot, we've got machinery, tools, and you got 25% of those stocks that are at highs. So that is certainly one of the highest concentration of basically strength and rotation that you can see in there. And of course, you can go right down this list. Again, very dominated by healthcare, industrials, oil and gas. Now, in terms of correlations, there's definitely some notable uncoupling, decoupling in terms of the Nasdaq specifically, and some of these other equity markets, and especially even the dollar and 10-year Treasury yields. So this has been bright green for basically, the entire year, where risk assets are all moving basically risk on, risk off, and everything's getting kind of sold off or bought in lockstep with one another. But now we're starting to actually see much more, stock picking, rotation, selection going on. The Nasdaq is clearly just diverging from everything here in terms of other assets and even in terms of other the equity markets. So that's very noticeable. And then again, even for the Dow Jones, the SPY, you're starting to see some decoupling here and some of these correlations break down. You're still getting some pretty strong negative inverse correlations to what the dollar does to what Dow and SPY does. And same thing with 10-year Treasury yields. But everything else is starting to loosen up a little bit. And this is actually a good thing. This is feeling more like a normal market where you're getting stock pickers involved, and you're getting actual, just critical thinking in terms of flows and where money is being rotated to. So I think this is a positive sign. This is just another subtle clue. It's hard to pick this up if you're not staring at this every day or every week, but because we do, and because we track this, we know what this has looked like all year long, and this is starting to look different. Now, it's only a 10-day correlation. It's short term. This could change, but this is why we do these videos like this and keep up to date on these data sets, is because we can pick up on changes like that. Now, Treasury yields, they were higher this week. So, last week we were excited, finally got a big rip off the lows. Yields came down, but now here we are again, back above 4% on the 10-year. So, we'll have to see. We're printed a lot of inside weeks if you're looking at the ETFs this week. And so inside weeks, let's see if we can get them to resolve, bullet, in a positive formation. But right now, moving back up to the upside. Finally here, dollar and commodities. So bright green across the board here. All of our commodities up. Natural gas up 11%. Silver, big week, 8.5%. Copper, crude oil, all the way down the list here. And the dollar index was up. So even though it did have one of the biggest down moves in years on Friday, it still managed to close slightly higher on the week. Bitcoin as well, up 2% on the week. So that is it. Oh, sorry, we slept in our current trade risk system positioning here. Okay, so this is our trading systems, our two trading systems here. So we got our Merlin long-term trading system, still very defensive, still, not super trusting this market yet, but it's getting more inclined to want to start buying. So there is some interesting developments going on with our trading system, but it's still pretty cash heavy, as it has been for most of the past several months. And our short-term trading system is 25% net short right now. So it is still leaning on the short side, but it certainly did a lot of covering of its short exposure this week. And, we'll see what signals look like for Monday. Our trade risk index, which is an aggregation of the two of these, is about 10% net short. So again, it's not really big, bold positioning one way or the other. It's pretty neutral defensive here. And that's currently the way we're positioned heading into next week. These are our quant-based systems. So if you are interested, we've got $1 trials. Check it out. traderisk.com/trial. See if these are a good fit for you. And with that, we are now done with this part one of the episode. We are going to continue on for another 10-15 minutes. We're going to look at some price action, some charts, and some trade ideas. So if you do want to continue on, head to the traderisk.com/SMW. $5 gets you the full access to this episode, or you can subscribe to our monthly membership for $15 and save yourself a little bit of cash. Gets you the full version on our weekly episodes just like this, to help you game plan for the week ahead. So that is it for me. Have a great weekend out there, and we hope to see you back here next week.